Hey guys, how's it going? So I am this Q4 earnings report. I wish there was a conference call so I can listen to what they had to say, but they released the earnings on, believe it was April 1st, April Fools, at 4:49 a.m. and the stock on that day was trading up 633,000 shares. Looks to me like Ianthus could be starting a new uptrend here. But again, that's my opinion. And we'll see what happens over the coming weeks. Like I said, doesn't matter what kind of problems they have. At the end of the day, stocks are worth as much as investors are willing to pump. And it feels like big money thinks that this company has some value and will be pumping the stock. I could be wrong. Not, we'll see what happens in the coming days. But it was a really good amount of volume that came in. The stock went as high as 37 cents and pulled back to around 33 cents, closed the day off at 35 cents. I think that it's starting a new uptrend. I think the stock is going to go higher, but of course I am biased because I'm a shareholder and I want to see the price go up. Anyways, let's quickly talk about Ianthus fiscal fourth quarter and full year 2020 financial results. They came out and their revenue year over year increased 93.5%. Gross profit was increased by 232%. They did lose $309.8 million, which isn't that bad because I will get into those losses later, and they're not as bad as it looks like on paper, at least on this press release. So they didn't actually lose $309 million. They lost a lot less than that, but they're losing it. And then they did address the liquidity. Due to liquidity constraint, the company did not make applicable interest payments due on the 13% senior convertible debentures and its 8% convertible unsecured debenture due during 2020. As previously disclosed, a non-payment interest in March 2020 triggered an event of default which respected to the company's long-term debt, which the company as of December 31st consists of principal amount facing 97.5 million and 60 million and accrued interest of 15.1 million and 4.8 million of secured notes debenture. So that because of that event, the stock plummeted all the way down to 10 cents, but now it has been recovered to around 35 cents. They did do a restructure according to this, but for the fourth quarter they generated 46 million, gross profit of 21.8 million, and net loss of about 27.3 million, or a loss of 16 cents per share. According to this, they did restructure those convertible debentures by issuing out 6 million shares. So they do have problems with the debt. Let's just say that the company really needs to, they could get lucky and big money could come in and pump their stock to the moon. Like for me personally, I invested into the company fully realizing that the risk is, something bad could happen. The company could disband because of debt problems, and they could give all their assets away to shareholders, and then those shareholders could sell the assets to another company or something. But that is a possibility. So as a shareholder, you could lose everything, absolutely. So just be careful. I didn't put my entire life savings into this company. I just put in some money, hoping that, when the legalization happens, hoping they survive, somebody comes in and buys them out, because Canopy can easily buy them out. Aurora has the money to buy them out and pay off all their debts. Aphria can buy them out. There's so many different companies that can buy this company out and gain a huge footprint, and Sundial can buy this company out. They just use their stock to buy this company out, and then they use their cash to pay back all the debts, and boom, you know. So this is a really attractive asset, in my opinion. Gives you know, the Canadian players a huge footprint into the United States. So I definitely think that this is a very attractive acquisition, and they are growing as a business. And you know, they're in New York, New Jersey, which are both going legalized here very soon. They're in Florida, which eventually will get legalized, and this company will be a money generating machine hopefully in the future. We look at so this is the annual report that was released on March 31st. They announced it on April, but they released it on SEDAR on March 31st. Let's just quickly M2Q5Y. Scroll in so we can see it a little better. So as of December 31st, they have about $11.5 million of cash. Total assets of $357 million. They got rid of their goodwill. And intangible assets down a little bit. Yeah, plant and equipment, $101 million. Total assets of $537. They do have debts of $307 million. So, you know, their debts are not as bad as MedMen. But MedMen is way more valuable than Ianthus. Long-term debt is $14 million. Wow, that's been reduced quite a bit. Long-term debt, net insurance costs, $32 million. Deferred income taxes, long-term proportion lease liability, that's nothing. Current proportion long-term debt, $157 million, came from $10 million to $157. So yeah, what, like $200 million of debt? No problem for Sundial. They have $700 million of cash on the balance sheet. So, you know, like I said, big money can come in, pump up the stock, let them have the capital to pay off the debt, and continue doing business how they do. But will big money do that? I don't know at the end of the day. That's my gamble, right? My gamble is big money is going to come in and pump this stock to the moon, and then let them use that capital to raise money to continue to execute and pay off the debts. So why did I say that the thing is not too bad? So their gross profit was $86 million. If we look at the sales and administration, it was $109 million. A monetization and intangibles, this is nothing. Write-downs and other charges, like these three are nothing, right? Like impairment losses, that's goodwill write-down. This is more write-downs. This is more write-downs. So the expenses is only $109 million. The gross profit was $86 million. So in theory, they lost about a little bit more than $20 million of cash for the entire year. So, you know, they have an issued outstanding share of $171 million according to this. So it's not really that bad. Their financials don't look too bad. If you compare Ianthus to MedMen looks way worse than Ianthus. So Ianthus actually looks not that bad compared to MedMen. But MedMen is way more valuable than Ianthus right now. So it is what it is. I feel like Ianthus is a great acquisition target for, you know, Canadian companies to get a big footprint into the United States. So I think there's some value here, and this is my hedge into the US. It is high risk, but it's also high returns, because if this thing goes to $1, you get 3x your money. So, you know, but we'll see what big money does at the end of the day. And hopefully this company can flip a profit in the future. I'm hoping their next earnings report should be coming out here very soon, because that last report they reported was of December 31st. And right now we are in April 3rd. That means that they have they know what their financials are for the month of January, February, March, and they should be releasing that sometime in May, I hope. So I'm really looking forward to the next earnings report. We'll see what they produce in numbers, but I'm hoping they become profitable. They are very, very close to becoming EBITDA positive. If they do, maybe the stock will get pumped. Who knows? We'll see what happens. Anyways, that is it for my video. Thanks for watching. Subscribe for future updates and have a great day. Bye.